Look at us. We are live on time. How about that?
Punctuality is like super important to me. So I'm glad that we made it happen.
I'm generally a very punctual person. But with these, I don't know. It hasn't been working out. But this is good. This is
you got a lot of stuff you're juggling.
I got here early thinking, if anyone's going to actually show up early, it'll be Erik.
And it was correct.
I was right. Yeah.
Uh-huh.
Now, while we're waiting for people to filter in, I pop on the screen and I was fiddling with my camera, and I was like, I got to make sure I'm showing my team off here.
Repping the set, yeah. You're a partial owner, right?
And Erik he was like, did they win?
Is that who won? You still haven't answered that, actually.
Yes, it was the greatest Super Bowl I've ever seen.
Okay.
And the only one that I have attended live.
I see. And what made it so great?
It was not close from the first kickoff. It was just pure and complete domination.
That's just kind of boring then, isn't it?
Yeah, that's if you are not an Eagles fan, and I think there are some of you out there, you probably found it boring. But I will say that I found it to be the greatest football game I've ever seen.
I see. I just like that. I just like one of my favorite games. I don't watch them because they're boring, but one of my favorite clips that I saw, it was a dude from the Giants that like caught the football on his head.
Oh yeah. That was a great play.
I think the Patriots had like a near perfect season that year or something.
Yep, they did.
The fact that is what spoiled a near perfect season is just
beyond
comical to me.
Yeah.
It's so awesome.
I mean, it was just, and it's funny. So the Patriots lost to the Giants. The Patriots lost to the Eagles. And that was this Super Bowl 52. This is my sweatshirt from 8 years ago.
Okay.
And the Chiefs lost to the Eagles. The Eagles prevented a Patriots three-peat, and the Eagles have prevented a Chiefs three-peat.
Honestly, this is almost as fun as talking about the baseball cards. I would really like to be able to do either of those. So maybe we could do that one now too.
All right. Join Let's Talk Markets next week, where we'll be talking exclusively about baseball cards.
You guys did teach me a lot about those, though, because that's just another thing that's never even occurred to me in my life. Well,
I love it. I'm so back into baseball card collecting, and I got my son, who's like super into it also, and it's just such a fun experience together. We watch baseball, we play baseball. I coach his baseball team.
That's cool.
We collect baseball cards. Yeah, it's super fun. And he's really come to love baseball, and he's very good. Unlike me, he's quite athletic.
Thinking of that too, it's like a very American sport up there. How's that going to fare? Are you guys going to try to ban that soon, or what's the game plan?
All right. And with that, let's jump right into talking about tariffs. We're here to talk about Trump, tariffs, and Tesla. Oh, man. Yeah. Most of you probably know this. I'm up in Canada. I moved here a couple years ago from the great state of New Jersey, my home. And, I will say at a high level, moving here was actually somewhat of a culture shock. And I say that having visited Canada quite a bit before this. My wife's Canadian, so spent quite a bit of time up here. And you don't, I think, quite realize how culturally different it is. And it's funny because like when we were in the US, I would make jokes about like, I would joke about Canada being the 51st state, or like, why doesn't it just join the US or something? But then you get here and you're like, oh, wait, there's no such thing as school shootings or medical bankruptcies. And like, everyone's super nice and polite. And, like there's not crazy wealth inequality. And it's like, there's some real fundamental differences. And there are things that are there. Everything's more expensive and the taxes are higher. And, it's, there's good things, there's bad things, but like, it's such a different place. And the rhetoric, the bullying rhetoric, it's because it is bullying. It's like, denigrating and insulting for the purpose of simply insulting. It has had an impact, I think, on people up here in a bad way from an American perspective, because and you've seen it in the Canadian response. Like the government has not had to tell people what to do to respond here. People have stopped buying American up here. It's marked every store you go to. If there's stuff from America, it's marked. Anything from Canada is marked, and it's been a very like grassroots, organic response. And like you've seen it. For example, they got rid of all the Jack Daniels in the Lickbo in the liquor store here, and the CEO yesterday, I think I saw Jack Daniels was like, "Why would you do that?" He's like, "That's way worse than a tariff. That's just mean." And it's like, dude, come on. What do you expect? Like, yeah, Canadians are nice and polite in general, of course, but like it's like when your best friend kind of double crosses you. You're like, why would you do that? We have like, I'm not a fan of Justin Trudeau in any way, shape, or form. Please don't take this in any way like that. But he has given a couple speeches that, mostly boiled down to like, hey, America, like we have fought together, we have died together, we have really been together for 100 years now as the closest of allies. This is not cool, and it isn't. It really it's not cool. And then from an economic perspective, it's very destructive, unnecessarily destructive. And from a markets perspective, look at what we're seeing, right? I mean, markets are down as we're speaking. Nasdaq's down 3%, E-minis down 2%.
Vol's up 12. Perfect trading day. Perfect trading day.
Yeah. Thank you, Eric, for taking a break on this very, I'm sure, profitable of days to talk to us about what you're seeing in the market. But if you look at the gains since the election have been wiped out. Tesla is taking it on the chin. Down to 260 today, where it was, its peak was almost at 500, almost cut in half, and I don't see a bottom there. So this is like the cutting off your nose to spite your face thing. Like the tariffs on your top trading partners make no sense.
So let's explore that a little bit though, because
sure.
I think it's disingenuous to say it makes no sense.
Okay, how so?
Well, I actually want to have an open dialogue because I don't have a great perspective on it, but okay. I do know, at least believe, that kind of decision wouldn't be made just to make it, right? Just cause let's just make everything more expensive. This will be great for everybody. Like I know the decision's not rooted in that. So I think
generously you can say it's rooted in a misunderstanding of trade imbalances. And I think that would be generous because I don't believe it's a misunderstanding. But otherwise, let's Mexico, I think, is something separate. But at the same time, I would still disagree that tariffs are the appropriate policy response. But if your problem is immigration and drugs across the border, Mexico makes a lot of sense.
Let's pause on that though.
For sure. Okay.
Do you take that at face value that that's actually it?
Oh, I don't. I mean, you can't say it with a straight face,
right?
Vis-a-vis Canada, because there are no drugs or immigrants.
Exactly.
If anything, it's going. It's all going the other direction. Like the drugs and the immigrants come from the U.S. into Canada.
Right. Yeah, and that's why it's like that's why I think from a game theory perspective, it's deeper than that. Like I think that's the surface level scapegoat that's being thrown out there just because for a lay listener, they might latch onto that and say like, yeah, okay, fentanyl's bad. So, whatever. But I don't think there's a reality where Trump or his cabinet having access to the information that they actually have would look at it and say, yeah, this is like a big problem with Canada, this whole immigration thing and this whole fentanyl coming in. This is a big issue, right? Like I think
they look. I think he looks at a $200 billion trade deficit, and he says that's a problem. That is ostensibly what he is saying. Of course, he knows and has the access to information which says that trade deficit is almost entirely because of the U.S. buying Canadian oil at a discount. So Canada sells oil to the U.S. at a discount, that's very important because the U.S. Would rather buy oil at a discount from Canada than, let's say, from any other country. If you have to buy oil, it should be from your nearest neighbor at a discount.
Mm-hmm.
Is there anything, then he says, oh, you got to let our banks into Canada, but the U.S. banks operate here.
Really constrained, though.
I mean, the entire banking industry up here is really constrained.
Yeah. But because I think that's the broader thing that I see, honestly, is that I think there's a surface level message that's being sent, but I think there's a lot of small little things like that bubble up and lead to the decision.
Yeah.
But the other thing is, do you think that the tariffs are being used more so as a behavioral change agent versus something that are going to remain indefinitely?
I sure hope so, because they are very destructive to both economies. And if the U.S. maintains this posture, which 25% tariffs on Canada and Mexico, even though the Mexican tariffs have apparently been delayed for another month, and even though the backdrop of all of this is that the trade agreement in place between U.S., Mexico, and Canada is the one Trump negotiated in his first term. Let's all be clear on that. The terms of trade are the ones he said were the greatest trade deal ever. Okay. That's why I say that I don't think that tariffs are the right policy here, because he's trying to change things, trying to change certain things. And he's either trying to change certain things, or he legitimately wants to cause economic destruction in Canada in order to annex it as the 51st state and send the military in.
I don't see that.
Do you think that's a 0% possibility?
No, zero. It's right. I would never go to absolutes, but
Okay.
I would say it's about as close to zero as I could imagine. But I think the broader point, I don't disagree with you in terms of like, are tariffs the correct tool, but the one thing I think is difficult, and to be clear, when it comes to Trump, just so everybody knows, like my lens, I'm really not like fully pro or against him. Like I have things that I like and I have things that I don't like. And I actually really don't like the way that we're treating Canada. Like I really don't. I think that you use the perfect word, which is bullying. But but it is absolutely getting people's attention, and people are doing things very quickly that he wants.
Yeah, that's true. So, and I want to agree with you on something. Like there are things that I like about what he did in his first term, which was policy that Biden mostly expanded on. We've talked before about antitrust, and I think that's one of the most critical things that has been changed about the U.S. government policy since 2016. That was a fundamental change Trump ushered in, Biden expanded on, Trump has continued with, thank goodness. And so there are things that I do agree with, and there's a lot I disagree with, of course. But I think that it does. I mean, has it changed much? I don't know. I don't know that I can agree with you. I think that there is a lot that there are a lot of headlines that are performative. Like when the first round of tariff threats came in, and then Mexico's like, we're sending 10,000 troops to the U.S. border. You can find headlines where they've sent 10,000 troops to the border like every other year. In Biden administration, the first Trump term, that's just what they say. Hasn't really done anything. He has made dramatic changes at the southern border, which have dramatically reduced the flow of immigration across the border. I think that's probably a good thing. It's not an area of policy that I know well enough to comment on, but I do think you want to reduce illegal immigration. But do you want to have an immigration deportation force rounding up immigrants and sending them either to Guantanamo or back to their home country? I think you might be surprised at the amount of inflation something like that would cause. Maybe you want that. I don't know. I don't agree with that kind of policy, but I think of things often through like a human suffering lens and an economic lens. And so that's the kind of thing that really doesn't work well for either one of those things. And blunt tariffs on your largest trading partners is both, I think, an economically bad idea and causes a lot of human suffering.
Don't disagree. Yeah, I definitely don't disagree. I think the main thing that I've been kind of seeing through a lot of his movements so far, I think it's undeniable that he's mixing things up heavily, whether it's for better or for worse. And I think that right now he's moving at a generally blistering pace with most things. So that's why when I look at the tariffs, I personally don't view these as actual like economic or trade policy based decisions. Like actually, I really don't think that's it.
Sure. I think that's a reasonable way to look at them.
Yeah. I think it's more, again, to the point we made earlier, a very stern bullying approach to essentially coercing different responses. But I'm really interested to see how these pan out, not really over the next month or two. I think there's a lot of like, dog and pony dancing stuff going on and just exactly the word you use, right? Performative. Yeah. But I am curious what this looks like 3 to 6 months down the line. And because like the reality is the US gains very little by weakening Canada, right? Right. And that's why I actually don't really think that's a big part of the game plan. Now we all know Trump he speaks in hyperbole, right? And he purposely does that because if you look at a lot of human interaction style analysis, it's super effective. People who are hyperbolic, everything is the best, the greatest, the nicest, the most beautiful. Like that is very, very alluring to people. And it garners, their attention very quickly. But I think that he is a lot more perceptive than a lot of that. It's like the same thing with the Russia-Ukraine war, right? The whole campaign trail was, I'm going to end it within 24 hours. Unless my clock is broken, we're still here, right? But the thing is I don't think there's a world where Trump actually thought he was going to end it in 24 hours. He understands how complex this is.
I mean, I do think he thought there was a chance he would call Putin and say, it's done. And Putin
I don't think so.
Okay.
Yeah, I don't think so.
I mean, clearly not. That was an absurd thing to think. But but he also said, prices are going to come down day one.
Right.
Prices have only increased.
Right.
And the U.S. and here's the problem with, I think, this approach, as we have seen it over the first 2 months of the administration, or month and a half, whatever, is that it has created such dramatic economic uncertainty. It has resulted in
awesome tradable markets. I agree.
Yes, awesome tradable markets. It has resulted in inefficient, trading, like foreign trade and acquisition, as people try to front run tariffs and accumulate inventory. It has brought the market down a ton, which has, and and that kind of rhetoric and that kind of effect on the market feeds through into consumption. So consumers are now consuming less. It's filtering through into manufacturing. Manufacturing indices are dropping significantly. The way I see it, the U.S. is in recession right now. I think that if you look at the economic indicators, and I might be a little ahead of it, and I might be wrong about this, but and I don't think I'm reading too much into the Atlanta Fed Now forecast, which says minus 2.8% on GDP run rate. I think that the U.S. is in recession, and it is a rhetorical. It's like a rhetoric-driven recession. And people might argue two things. They might argue recession has been necessary and this will be healthy. And that's probably hard to argue. Other people, which I think you have been sort of very very sympathetic to this idea that we've actually been in recession for quite a long time, but it's been such a bifurcated economy that many people are doing well and many people are doing very badly. And I'll tell you, to back that up, it's something that I think you felt but it wasn't necessarily like evident to me in the numbers. But I think you've been right about it. And what was so eye-opening to me was this consumption number that came out recently that showed the share of consumption by, the super rich is up to like 50% of all consumption. That's just insane to me. It's staggering to me. And it really shows that whole idea of a vibe session, that the numbers weren't quite reflecting the lived reality for a lot of people. Like that is the first number that I've seen that really opened my eyes to what I think you've been talking about and feeling for quite a while now. And so I think the risk that the US runs right now is stagflation. And that is a very real and very serious risk, because if you get into this, into this trend of anemic or negative GDP growth while still having sticky inflation, which is where I think these numbers are going in the near term. Inflation is going to go up, tariffs drive inflation up, and GDP growth is going down. The Fed loses a lot of its intervention abilities in a stagflationary environment. It can't cut rates. It can't flood the money with the market with money because of inflation. Usually a recession is accompanied by a drop in inflation. And I don't think we're going to see that this time. I think we're going to see a drop in growth, and I think inflation is going to stay around where it is, which is like in the high 2s, low 3s, and we're going to see increases on unemployment, and that's a really bad combination.
What do you think the timeline of something like that is against the reorientation of kind of just the US supply chain? Because we're hearing from companies like Apple about domestic investment. We're hearing from TSMC. We're hearing from like auto manufacturers. There's actually quite a few instances that we're seeing a lot of these companies talking about domestic investment, but obviously that takes time. Even if it takes
a lot of time, and it's stuff that they've been talking about since the first Trump term. Again, since Biden, since 2016, I think there have been, and this is again where I fundamentally agree with Trump, and where Biden I think continued these policies of trying to bring investment back into the U.S. The CHIPS Act, which was when you refer to TSMC and Apple, like that's what you're talking about. I think those are incredibly important to onshore manufacturing. I would argue you don't necessarily need to be so restrictive as to think it needs to be domestic in the US. I think what needs to happen is you need a really strong trading bloc, which is like North America, Europe, Australia, a bunch of Asian countries. You need and some and Africa as much as you can. You need this massive trading bloc to counter China. That's what you need. And you need the free flow of goods and services within a trading bloc like that, because we're moving from a unipolar world where the US has been like the superpower to a multipolar world where China is, there's no way around it. And so we need to stop doing things that like play into, advantaging China, which is what you're doing when you put tariffs on your biggest trading partners that are less than the ones you're putting on China, which is just ludicrous. And you need all of your friends together and united against your enemies.
I think I still go back to the fact that I don't think the tariffs are designed to stay in place. I think from Trump's lens, he's looking at it as our friends in different ways aren't behaving in the way that he wants to see them behave. Again, I'm not saying for or against. I'm just saying he's seeing these entities and he's like, well, the European Union, for example, there's some really interesting trade agreements between the US and the European Union, even down to defense spending and a million different things, right? And he starts to look at that and he's saying, well, I don't really know if it should be at these ratios.
Yeah.
But I think the broader element that I see is I also don't view the domestication production of things as polar, one or the other.
Yeah. And I sort of sidestepped your question too, which, I think, onshoring production, there's nothing more important. those are good jobs. Those are the jobs where you can sustain a family on a single income. Like that's the America you want to get back to. And that's a long way away. It took decades to get where we're at. It will take decades to fix this problem. There's no way around that.
I really do wonder about the duration and how long it is likely to take and what kind of impacts will be seen when, because one of the other things I have to be honest, never once in my life that I think of is like this immigration gold card. To me, it just seems so off the wall, but
we have the E1 visa, which is less corrupt than a gold card. Like the E1 visa, I don't know if you're familiar with it, but it's for entrepreneurs.
Right.
If you're going to come to the US and invest in a company and start a company, there's a visa for that. No problem. You're going to come create jobs in America. We welcome you with open arms.
Which is interesting, right? Because on the same vein, he was talking about, and I don't know the legitimacy of it, but like the movement of people through, like foreign people through our higher level education, and then they have trouble staying sometimes, and that seems strange to me because it's like,
no, it's a horrible thing. One of my best friends dealt with this. He came to the U.S. from Indonesia as a kid through like the sponsorship program. They sent him through high school in North Jersey, like this Indonesian kid. Good. Great guy.
That's a cultural experience.
Yeah, he went to university, did computer science at like a nice university, and then the Indonesian currency crashed in the late 90s, and he could not continue at that university. He ended up at a very small state university where he was able to finish his computer science degree. Smart kid, hard worker. Smart, not a kid anymore, but like smart guy, hard worker. And it was such a struggle over like the first 10 years for him to stay in the country. And it really been the only country he knew. And it was tied to a job. And he's exactly who you want in the country. Right. And it was a horrible experience. And it's, again, like in Canada, it's a totally different immigration system where there's a points-based system.
Right.
And someone like him would have been no problem. Super easy for him to have immigrated.
And that's one of the really interesting things about the immigration policy. It just seems like one of those things that probably needs to be revamped and modernized a bit. But well, it's like anything else. Anytime you look at any other large democratic focused institution, like you can't outpace the bureaucracy that forms around it. It's like an impossibility. It's actually one of the advantages I think that some of these other countries like Russia and China have, is that they obviously have no shortage of issues, but from a leadership perspective and which way the ship is going, the ship doesn't go different directions every 4 years. The ship goes the same direction.
That's true,
for 80 years.
Right.
And everything is built towards that.
Yeah, it's very different for planning. And, I've spoken about all the good parts of Canada too, like the bureaucratic bloat up here. Oh, man, it's insane. This is where you need to get rid of waste, fraud, and abuse and like drop the size of the government by like 30 or 40%. Let me tell you.
Did you see the metrics? I just get such a kick out of these, about like the people that are enrolled in Social Security, not necessarily collecting payments, but like they're in the system.
Yeah.
And
like the ages.
Yeah. There's literally, there's a group of people. It's a super small number, but it's just so funny to me. Where it's like, there's people that are older than the country.
Yeah.
It's awesome. I gotta figure out what the regimen is, right? Like what's the skin lotion we're putting on?
I got a longevity regimen for you. All right, we'll have to talk about that another time.
I tell you what, I could use it because
I do it already.
I just turned 34 and I'm aging like milk.
34.
So we're gonna need an intervention soon.
See that gray hair? Oh my gosh.
Yeah. So it looks like Breyer is asking you a question. He's saying,
this is a good one for you.
Am I greedy to say I like the market dropping? Because I'm 23 and just seeing opportunity.
Rock on,
also
Breyer.
Been selling covered calls and puts during the volatility and have been treated well. What do you think?
You're loving this, aren't you?
Well, it depends on what you trade, right? Because like covered calls right now it depends on your horizon, right? Like obviously if we're 23 talking about a really long-term horizon on quality companies, that's one thing. But most people that I talk to from the covered call space, they start, really wanting that premium. And all of a sudden you ask them like, oh, like, what are you trading? And it's like Hims, Palantir, it's like all these companies that are, doing the thing, but you kind of don't know which of those are going to run into some serious headwinds at some point. So the one thing I always think about with covered calls is obviously it depends on your horizon, right? From a trader's lens, there's an opportunity cost for me holding something that's cratering that might emerge on the other side, but 3 years down the line, it's like, well, I'd rather make money over that time frame than that. But from like an investment lens,
sure. I mean, if you're using it to set yourself up on a multi-decade time horizon, I mean, it sounds great to me. Like 23, and you're doing this, and you're happy to see. You should be, if you're that age, you should be happy to see the market dropping, right?
Yeah,
like, absolutely, Briar. That's like the exact right attitude. And you've got decades and decades for perspective and an investment horizon. I love it.
Yeah, just don't get confused and get into companies that have really high near-term premiums because they're super volatile that won't make it the decades. You need something that's going to be here in a couple decades versus a lot of the companies that, like, that's the reality of what we're going through right now from a broader market lens. Is it's another technological revolution, right? AI, these different accelerators, but it's like any time we go through this, there will be hundreds of them that pop up. And then if we look over the next 20 years, you're going to see 5 of them that have made it through the gauntlet.
That's right, for sure.
You have to think of it pretty carefully in that lens if you're in the more speculative names. If you're looking at stuff that's like, I mean, Nvidia, right? The probability of them going by the wayside over the next decade, it's probably not super high. Who knows? Anything can change. But as I'll always say, if the CEO is out there signing bras, the company is doing okay. Like the company.
I mean, look, Nvidia's at 110 now, down from a peak of 150.
Yeah.
That's tough, man. That's a tough drawdown. What do you think? What do you like? Is that, are we going to find like some support, or do you see another leg down coming?
I mean, we fell through the most recent one, right? Like there was kind of a support
and
handle.
Tesla, same thing,
at like 115. Well, I don't think we can add Tesla in the same vein, because if you look over a chart of Tesla, it's been a schizophrenic its whole life. That's like, and it's part and parcel to what the company is, but then also how the CEO rolls, and that impacts sentiment. But
I like this comment here. Tesla's at 280, although to be fair, at the moment it's at 260. That's how fast it's dropping.
Right.
Down $17 today. Get back to me when it's 50. But that's like, I mean, okay, it's trading at 260. Where I'd seen this yesterday. Its market cap is still $850 billion for a car company. Now, Dennis, who comes on the program from time to time, he's like, it's not a car company, it's an AI company.
I was going to say, I do think it is more than a car company. I think it does shortchange what they do to just cars. But I mean, definitely it's not a car company, right? Obviously. Obviously it is a car company, and that's a big part of the earnings that it produces. Like 82% of the current market cap is from automotive, but 8% is from energy generation storage, 6.2% is from service. And then within the automotive segment, there's different buckets of that, right? So that's why Tesla is a complicated company to look at, because if you look at the trend of that as well, it continues to slide around. But Tesla is,
I mean, I think that right now it's a tale of Musk in the election, right? And what you've seen is this crazy run up immediately after the election, and it's almost back down, another $50, and it'll be back down to where it was 5 months ago.
Yep. Which, I mean, a lot of the market finds itself in that spot, right? Like you go through this sentiment-driven, euphoric skyrocket. And then we still have to face the realities. I mean, like, let's also keep it a buck. Even if we didn't have tariffs, things are still not necessarily super rock solid right now. There's a lot of other things happening in the world that I think deserve a little bit of respect when we're trying to price things and discount future cash flows. So
what do you think of the Trump trade here? So the Trump trade was a pretty good one for a couple of months.
Of course. Sentiment. Yeah.
Now it's all gone, gave back all the gains. So maybe, I don't know if you wrote it down, you probably thought that was a good trade too. But like, what do you think the next few months hold for that?
I think that we'll probably go through a digestion phase before we start consolidating. And I think like even today, there's still winners and there's still losers. And this has been the case over the last couple of weeks. It's not like the market is unilaterally crashing. What we're seeing is, if we break it down from a sector perspective, there are elements of the market that are still continuing to show strength outside of defensive names. But like staples definitely is continuing to do well. Interestingly enough, surprisingly, healthcare continues to do well. And I think everybody's thought was healthcare is about to get smashed.
Yeah.
Because, you know,
what a world with RFK as the head of HHS and healthcare stocks and big pharma doing good.
It's a mix. It's a complete mixed bag. And that's kind of the broader theme that I've been paying really close attention to, is that there's absolutely the dominant market trend that we're seeing, which is large scale pullback and digestion. And that needs to happen. It's been, how long has it been since we've even had a moderate correction, right? Like you typically get a few of them a year, like 2 to 3 a year. So we've gone through periods where that's waned massively and then also digested.
There was, I mean, hold on, I should have this at the sort of my fingertips, but if I look at like, so like a 5-year SPY chart, there was a pretty substantial one early 2022, right? That was what?
You're talking about just pullbacks?
Yeah. So like SPY peaked end of 21, came down pretty hard through 2022.
Yeah, 22
was like 2023 to regain those levels.
22 is effectively a bear market. It was like down 19.4% on the year. Yeah.
Now back up. But yeah, I mean, I think you're right. Like we need, but if you look at, like it is a sawtooth chart. It is one in which there are, what I think has happened is that markets just move so much faster. Like these corrections now are so much shorter lived than they used to be.
Completely agree. And then
since they generally move up, it just feels like, you kind of forget the pain of those corrections.
It's always the most comical thing to me to see people when the market's down 2-3% and they're like, where's the bottom? It's like,
I used to trade a strategy that needed the market to move more than 1%. Didn't matter what direction.
Right.
But if the market had moved more than 1%, the strategy would trigger near the close and it would do its thing. And like back in 2009 and 2010, like that was just a very common move, 1 or 2%.
What were you buying for that?
It was a trade that had to do with sort of like levered ETFs. And it was a good one. It worked really well. But it was like back then, it was like that was so common, and you get them both directions all the time. And now it's just it's like such a steadier move up, right? Like it's a fundamentally different market. Markets have changed dramatically sort of over my trading career.
I can only imagine, especially from like the lens that you've maintained, because like I used to just plot simple things, even like total risk premiums on a rolling 20-day basis, right? And like those have contracted massively. Right. But it just the advent and proliferation of algorithms, high frequency trading also really drives extreme short-term sentiment, like super fast. Yeah, we can see that. I mean, GameStop is one of my favorite examples of that. Like as soon as the cat tweets, somehow magically, literally within the same frame,
Yeah, algos are coded. I mean, they're looking for that. They're moving in a millisecond. You can't possibly race those things.
No, it's really impressive though. It's fascinating to see.
So here we got a question
I know.
on
I'm literally
GameStop.
just gonna ask you about that.
So do market makers manipulate short distorted ETFs like XRT? And I'm not going to deal with the dark pools part because I've talked about this a lot, but retail trading does not go through dark pools. It goes through off-exchange trading systems. While those are dark trading systems, they're sort of fundamentally different from dark pools. Still extremely problematic and something that we have campaigned to end now with We the Investors for 3 years, and something I've been trying to end for 13 years. But that aside, I do think the question about XRT is super interesting, and it's something that we've talked about on our program with John Welborn a couple of times. And so I will say yes, 100% yes. You look at XRT and the insanity of it being on the Reg Show threshold list for hundreds of days at a time in a row. And if something's on the Reg Show threshold list, this is interesting. I just talked to a guy yesterday who is an expert in stock loan, and I hope to have him on the program soon, probably with John Welborn to talk through these issues. And he, who knows, has forgotten more about stock loan than I'll ever know, and about Reg Show than I'll ever know. He was like, you understand, like when something's on the threshold list, it's supposed to be a universal pre-borrow requirement, not just a locate, but a pre-borrow requirement. And so it's absurd that you can have things on it simply means Reg Show is not enforced.
Yes.
Even though there are all these loopholes, regardless of the loopholes, Reg Show is not being enforced. And there is certainly something to this idea that XRT and massive failures to deliver are a mechanism for creating synthetic borrows, potentially for GameStop, and certainly other constituents of XRT, but it doesn't seem like those are targeted at all.
Yeah, I literally think that's one of the really, really sound synopsis. You know more about this than I do for sure, but I've spent a lot of time over the last year, just digging into the world of GameStop. I've done a live stream literally every Saturday for effectively since last year, just exploring more and more. We're actually about to read, there's a piece about you in the DD library. I don't know if you know that. But yeah. Awesome. I'm excited. Awesome. Yeah, I'm excited. That's literally the next one. I'm stoked to look at that one. But the interesting thing too, though, and one of the notes to mention for retail traders, because I noticed retail traders, they sometimes take, I don't want to call it like a victim stance, but we perceive it as like it's all about us, right? So the end part of Paul Valso's to cheat retail investors out of money. And I just think it's important for retail investors to understand the broader landscape that we're in and the incentives. It's not necessarily, and you can correct me if I'm wrong, but I wouldn't view the market makers trying to necessarily manipulate retail traders necessarily. I typically view it as they're trying to maximize their profit regardless of who's on the other side. It's not like this pointed target at this group. I always view
they'll take advantage of anyone.
Exactly.
they'll gladly profit off of anyone. And a big part of the fundamental problem in markets today is that 2 and sometimes 3 market makers control the entire market in some symbols. And they have complete price control in those symbols, on exchange and off. And so, it's one of those sort of fundamental problems in markets where there simply isn't enough competition. And that's mostly because of that aforementioned problem from earlier, that there's this off-exchange trading space that advantages a small number of firms, that gives them both information asymmetries because they understand the flow better than anyone else, and they control off-exchange prices and on-exchange prices. It's a huge problem.
Now,
and I'm curious in the options market. Can I ask you, what's your experience of the options market from that perspective?
Oh, you know the answer to that. You absolutely know the answer to that.
It's a leading question, of course.
Yeah. So you just answer. You know exactly what it's like. Yeah. Listen, man, it's just getting where you fit in. That's about all you can do. That's it.
Let me ask you something. When you go to hit a price in the options market, do you ordinarily Do you trade more passively or actively?
Both. I mean,
Okay.
well, hold on. Define passive. You talking?
I mean, like, are you resting on the bid or the offer, or are you crossing the
Oh,
spread?
you mean like actually when transacting? It kind of
Yeah.
both. It really depends on like what I'm trying to do, because one of the cool things about retail, we don't have a lot of advantages in the markets, but we do have a couple. One of them is we never have to be the first to move. We can easily see when movement's happening and just try to ride a little bit of the coattail of that movement. So in those instances, super aggressive. Don't really care. I am unabashedly overpaying for vol and just capturing movement, and that is what it is. But in other instances, I mean, it's actually funny. You see it in the indices quite a lot. And you can see instances where put call parity is distorted, and you're like, oh wow, this is cool. Like you can do something about this. And you start like looking at the trade, and you're like, well shit, the bid ask spread is 15 cents. And at the end of it, you're like, damn it.
Yeah.
This whole like theoretical learning you go through, and you finally like see it, and you're like, well, looks cool. Let me take a screenshot of it, because that's
that's the problem with theory. It tends to fail when confronted with transaction costs.
It's about all you could do is take a screenshot of it and be like, well, I saw it. That's cool, right? Now, one of the things that I'm curious what the future looks like is you were just talking about off exchange volume via different vectors, right? Not just dark pools, but internalization and whatnot.
Yeah.
More and more order flow. What is it, over 50% now? Is where does that terminate, do you think? Like, is there like, where does that ultimately go to without intervention, if there was intervention? But I'm curious from a game theory perspective, how far does that go before exchange volume essentially is gone?
I don't know if there's a limit given how markets are designed. Markets are designed, thanks to Bernie Madoff, to advantage off-exchange market makers. And, this is all the system that Bernie Madoff came up with, and that Citadel and Virtu are now running, and other firms. And I would have thought that us sort of crossing this 50% threshold would have meant something. But frankly, for many years, there have been plenty of names where well over 50% is trading off exchange. The SEC never seemed to care. And so regulators seem completely neutered in the face of the political power of Citadel and Virtu. And so without regulatory intervention, I mean, I've heard people say, well, would it matter if it was 80% off exchange? You're still getting the trades, that provides the price discovery. What do you need exchanges for? And like, that seems insane to me. But the people saying that are the ones that make the money off exchange. So of course, it's not insane that they're saying it, because they want big annual bonuses. That's all they care about. But if you care about markets, we've long crossed the threshold where it is deteriorating market quality. And it's making the US a market that is inferior to other markets around the world. The US is still bigger. And so it doesn't look as bad as it is. And not a lot of people are really quantifying the damage that's being done. But when we did, we saw it as something north of $10 billion a year that's being taken out of the pockets of retail and institutional investors and into the pockets of market makers. The market makers will say, oh, that's crazy, we don't make that much money. But that's not the point. The point is this is money that those firms or the retail investors should have saved with tighter spreads that they are not saving, along with the disadvantageous fills that they're getting. So man, I'm probably as pessimistic as I've been in a long time on this issue, because I did think that when Gary Gensler talked about addressing the issue, he was going to, and he did not. And I don't think that this new SEC will. But I still think that there are opportunities to make improvements that the SEC might be open to. And so I'll tease a little bit of something. Next week, we're going to petition the SEC for rulemaking, and then we're planning a trip down to DC to meet with people at the SEC, potentially in Congress, and to sort of once again, now that things are a bit more settled, everything's been sort of very unsettled since late summer last year when you weren't going to get anything big through, anything
Right.
new started, and you had to wait for it to settle. Now things are settling. And so I think it's time to sort of pick up the mantle again. And it will be squarely focused, as I spoke with on the program with John Wellborn, squarely focused on Reg Show and addressing loopholes in Reg Show.
Yeah, well, I mean, I think you hit it earlier when you mentioned the enforcement arm, right? And then it's not surprising because when you look at, I mean, just look at like the speaker fees that Yellen gets when she went to go talk to, right? It's just like, you could tell a lot of these people, they make decisions not totally optimized for what might make the most sense, but they're striking a balance because you want to stay friends with the people that are going to give you
That's right.
$250,000 to go speak at a thing for 2 hours.
For sure. It was the Democrats for 4 years. Before that, it was the Republicans for 4 years. Before that, it was the Democrats for 8 years. Every single time, it's the same story. And the next 4 years, you've got Griffin and Jeff Yaz, the two biggest market makers, two biggest donors to the GOP.
And did you notice that Ken was at the cabinet meeting?
Yeah. So he's obviously, we know he's friends with Musk, and so the game continues. But we'll still push. I don't let it dissuade me. I haven't let it yet. I still think you push. You stand up for the right thing. You get a lot of people who stand up with you and have their voices heard, and you keep pushing. And one of these days, the right thing has to win out. That's how the movies work. So I'm sure that's how real life must work too, right?
I think, joking aside, I do think that there is a world where if the right conditions coalesce, that there will be people that eventually would feel some type of way about it. But it's that kind of thing like you're talking about. And that's the difficult part about what you do, which is you have to maintain a steady line of tension on the issues so that when the correct trip line goes, that you're positioned to take advantage of it.
Yeah,
and
right.
a lot of that is based on who happens to be around. One other thing I was curious how you're looking at when we look at beyond the tariffs and all that stuff, there's a lot of moving parts for the broad economic picture as it sits, right? Like even before we add all of this additional friction, what are your thoughts on the general movement of the economy if we remove the new tariff inclusion and not the shorter term potential policy decisions, but if we think of it from likely the longer term policy decisions, how do you think the economy moves from here?
I'm sort of a perma optimist on the U.S. economy. So I think in the long run we're going to be okay. I do think there's a lot of damage that's been done. Like I said, in just 6 weeks, you can do the kind of damage that can take a long time to undo. You can ruin, the U.S.'s reputation around the world. You can ruin your credibility your reputation, your credibility as a trading partner, that you will stand by the agreements that you sign. You can, as you withdraw foreign aid, which is such a minuscule part of the U.S. budget, you open the door for China to step in, and you hurt a lot of people along the way. I think it's going to take a long time to recover, but at the same time, we are doing, like you pointed out, we're doing some of the right things. We are onshoring manufacturing. We are trying to build a more competitive economy through antitrust enforcement. Those are things that leave me optimistic, because I think those are things that are foundational to a strong economy, but that take a long time, like decades. Again, and antitrust, again, it's only been, Trump came in 9 years ago, or 8 years ago, and the antitrust approach took time to get started, and so it's only been really a few years that we've started to see the fruits of the antitrust movement. And so I'm very optimistic because of that. I think that that's the kind of thing that will lead to a much more vibrant, competitive economy. But man, the road to get there seems really rocky over the next, I don't know, 2-3 years.
I'm very eager to see the pace that things move, because that is one thing it does seem like Trump is actually trying to prioritize, is like speed. So part of me might be naively optimistic that these things might move a little quicker than like the standard fare, but who knows?
I hope you're right.
Yeah.
I very much do. There's, again, like I told you, I think of things through the lens of, economic effects and human effects. And, I think a recession, for example, which is where I think the US is either in or headed, that's something that hurts a lot of people. And so, that's pain you want to get past quickly. And I hope that we don't sort of settle into some stagflationary environment, because that's the kind of thing that will make the pain linger for a long time.
Well, and I think that's the interesting element here, is that there are going to be some factors that are going to struggle, and I think there's other factors that are going to do well. Right now, oil's $66, right?
Yeah.
So it's not even like the kind of thing that's going to be clear across the board, pain everywhere. There's going to be elements that actually are probably going to lighten up to different degrees, which makes it even more of a complex. What do you make of, last question, what do you make of commodities, specifically oil, where it is? This hasn't been this low since like 21, I think, or something like that.
It's the kind of thing that's so good because it is disinflationary, right? So it brings down prices. It hurts the bad people around the world, right? Most oil comes from dictatorships. It hurts them. And so, from a geopolitical perspective, it's a good thing. There's the other side of it, which is, the U.S. oil complex needs oil prices a little higher. So, it can be problematic for U.S. oil.
Listen, they'll be all right. Instead of a $30 million bonus this year, they're going to have to cut it down to 22, and they'll be okay.
Yeah, there you go. Right. I think I have an investment that it's not good for, so I'm not thrilled with it, but overall, like, it is good. And if oil stays in like the 60s and 70s, that's a great price level for the economy.
Great trade too.
Great trade, yeah. Commodities, man. I don't know have you been paying attention to nickel?
No, not really nickel. Nickel is kind of schizophrenic.
Yeah, nickel, like the Canadian threats on nickel, I thought would have sent it through the roof. I haven't looked at it.
Nickel freaks me out. It's almost like it's almost like trading currencies. I went through a phase, where we all think Forex is the secrets of the world, and then you realize
I did that too, until I got caught on the wrong side of the Swiss bank pegging to the euro. It's never traded a currency again.
I'm telling you, I don't know how it's done profitably, because you have to have like chameleon eyes that can see everything at all times. And you never know what the hell is. I just remember there's a couple trades I had set up with like the yen, and then there's just this random news comes out, and I'm like, what the
That's how it happens, right? Although I should say, like, my life is kind of structured like a currency trade. Because I have a mortgage in Canada, and I have my income in the US, so I am like as short cat as you can be, man.
I mean, that's not terrible though right now, because like the dollar,
it's been a great trade.
The dollar's been pretty strong, so you better hope that it stays that way though.
And here's Scott Paula, and this guy, he knows a ton about commodities and oil, and he's isn't the optimal oil range 50 to 90? Yeah, that's right. I think that's
wide though.
It's wide, but like when you get over 90,
right,
it becomes very expensive at the pump and as an input, and it's really good for, like I was saying before, the dictators. When you get under 50, it's really problematic for supply, and you tend to have a lot of supply go bankrupt. A lot of companies go bankrupt. So yeah, I think if you keep it over 65, I think is where U.S. shale needs it to be.
Yeah, I was gonna say I thought the 50 was a little low.
Yeah, but yeah, we're definitely like kind of in the sweet spot now. I think again, like oil companies probably like it a little higher, but they're not too upset, because I think case you're making here.
Yeah, well, and the other thing is domestic demand is probably going to continue to grow up. So yeah, we might see
We'll see if we're in. So oil, the price of oil can either reflect the oil supply or it can reflect aggregate demand in the economy.
Right.
And so oil dropping like it has is one of those indicators that we're going into or in recession, I think. Oh, and here Scott tells us OPEC's increasing productions for the next 18 months. So if that's true, then that probably means OPEC's making another drive to push out U.S. shale producers. They see the opportunity. But every time they do that, everything kind of mothballs. Price of oil comes back, starts back up again. It's been, it's been a pretty resilient market in the U.S.
I know it's been really fascinating seeing the relevance/irrelevance sometimes of OPEC, because a lot of times it does feel like, you hear them, you know what they do, and you're like, okay, yeah, that's like a really powerful group and they control a lot. Then you kind of start to realize that the aggregate impact, and sometimes it's nowhere near as profound as you think it might be.
They have lost the influence, especially with the U.S. becoming such a massive producer. And I believe a net exporter. Again, thanks to Canadian oil.
Thanks to the Canadians. Well, Trump isn't exactly the most eloquent, friendly guy, but it's kind of funny because a lot of us, I feel like Americans and Canadians, it both feels like our parent is being a dickhead to you guys, and then like your parent is trying to fight back, and like we all like still like each other as the children. We're just like, yo guys, this kind of sucks.
That's it exactly. All right, so on that note, all the kids are getting along, the parents all suck, we know that.
Oh yeah.
And Erik, as always, thanks for joining us on Let's Talk Markets Live. You can find Erik at Outlier Trading across social media, YouTube, and he's always on top of the market and options trading, and a good guy to listen to and learn from. So thanks everyone for spending this last hour with us. Always appreciate it, and great to see all of you out there and all the comments. And join us next week. We're going to have a special guest, Sam Rad, a futurist and someone who we can have some fun AI conversations with. Make sure to hit that subscribe and like button if you're on YouTube, and leave us a comment anywhere you're listening, and let us know what you like and what you want us to see us cover. So thanks again, Erik, and thanks everyone for listening.
Yep.